Hello and welcome to Leaders of Tomorrow Season 10. It's been 10 seasons of empowering India's small businesses and hand-holding you in your growth journey. I'm Sunanda Jayaseelan. On the show tonight, we're bringing you, as part of our 10th edition, a very special series of episodes where we talk about all the biggest trends in a specific area. Tonight, we are talking about the top trends in wealth management in 2022. We're also talking about what it means to be a unicorn in today's day and age. Those conversations and highlights are part of a series of interviews I've done over the course of the season. In tonight's show, we're bringing you the highlights with some of the biggest names and faces, both from the area of wealth management as well as India's unicorns. Listen in.
The wealth management industry is in the midst of significant change. A new generation of investors and living through the last financial crisis has brought new standards to the industry. A challenging investment environment characterized by increased levels of uncertainty is making it harder for advisors to generate superior investment performance for their clients. Let's take a look at the top wealth management trends in 2022. Listen in.
The traditional way of investing in India, unfortunately, doesn't work, right?
Okay.
And you very nicely summarized the traditional way. So I come from a Bengali middle-class family. The traditional way was you do fixed deposits.
Yeah. Oh, I forgot the fixed deposits, yeah.
You do Government of India bonds. They used to call them national savings certificates. So you do fixed deposits, Government of India bonds. You probably have some LIC policy in there as well. Then you buy real estate, right? This sum total, which has been the historical mode of wealth allocation for Indian families, doesn't work. It gives you returns lower than the cost of inflation, which means your wealth actually shrinks. First of all, get yourself a financial planner. On the SEBI website, there are 1,200 of them. Their phone numbers, their email addresses are given. Get yourself a registered investment advisor, and he or she will guide you through the process. But the summary of the process broadly is this. Set aside an amount of money, which is your rainy day corpus, right? So decide for yourself what the rainy day corpus will be.
Younger you are, more risk you can take for compounding your savings and making it become wealth. Because generally in debt, you get more or less fixed returns, while by investing in equity, as most of you know, the returns can be disproportionate, and that's the only weapon with which you can kill inflation. But it also depends to a great extent, I think, in individuals' psychology or nature. Because equity markets are one which, unlike your investment in land, where you don't know what is the price change today on an everyday, every moment basis, equity markets are one where you can see the price change. And most of the time I have seen you associate price change to value change. And that creates that nervousness, or that creates sleepless night. So it's a gradual process whereby people develop their mindset to be an equity investor. And I think last but not the least, one important fact which determines is a number of times you also need steady cash flow from your investments. So which is where also you go to fixed income.
Most entrepreneurs by nature are 100% equity, because bulk of their wealth comes from equity ownership in their businesses. So to that extent, they are already exposing themselves to significant amount of risk, right? Of course, over years, the business would create more wealth, but I think on an ongoing basis, any entrepreneur, to the extent that he is heavily exposed to his own business, he or she should definitely be creating wealth on the side, more from perspective of sustainability, family, and those kinds of purposes. And clearly that part of the asset allocation will depend on their goals in terms of what exactly are they planning or saving for. That's very individual specific. But by and large, 50-50 is a good number. I mean, otherwise, in general, one cannot advise. But to the extent that entrepreneurs are heavily exposed to equity, I think in their personal investments, it's best if they plan carefully and if they are a bit more defensive.
Initially, there is no partition between professional money and personal money. That means corporate finance, personal finance, all mixed up together. Where is the money coming in, where is it going out, is a very difficult proposition for them to remember. So 2 problems out of this. One is accounting issue. So your chartered accountant at the end of the year gives you a miserable time sorting that out. But the bigger problem is you don't know where you stand. Where is your money? How much money do you have? So you need to have that, for you to be able to have that resilience, to be able to tide over unfavorable times, which is a part and parcel of a startup ecosystem and life. You need to know what is your money and what is your company's money or business money. We give very few practical tips. First of all, have 2 separate accounts. Even if it's a current savings account that you're using for business, as a lot of people end up doing, have 2 separate accounts, one for your personal use, one for your business use. Paying for meals while traveling, it should always go in business account. You get tax reductions on that, right? So but apart from that, use your 2 different cards, a business card for your business purchases, personal card for personal purchases. So if you just maintain this bit of a thing, you'll have much, much comfortable time with your money.
As a country, we are very conservative with our money. So with such tail risks, what has happened is that people realize that it is very important to have secondary source of income, because your primary sources can also get disturbed. And the fact it is very important to actually manage your savings money by creating sustainable wealth investments. So like investments in the right sources. Their equities market has taken a very mainstream route. Post-pandemic, what has happened because people got time to retrospect their lives and understand how to actually build investment goals for next 5-10 years, and equities took a mainstream route. So that behavioral change has happened. The other thing is financialization of savings has been talked about a lot in last several years, over a decade, but post-pandemic, it took a very accelerated route where people actually have started to look equities market as very primary source of deploying their money versus traditional asset classes. So that financialization of savings is compounding very aggressively. And thanks to new age IPOs, many of these IPOs are around companies which we have seen started by people just next door in our house as a middle class or lower middle class Indians, and they aspired to build these great companies and took an IPO route. So people connect with these brands and they realize that how equities markets can help them to participate in their aspirational stories, because everybody wants to aspire to their journey. And these all compounded, and gradually that's what we are seeing, is that the growth of equities market penetration in India is increasing, and savings money apportioned to capital market assets is increasing, and that is going to continue, I think.
Time to slip into a short break. Much more on the other side. Just stay tuned. Welcome back with us here on Leaders of Tomorrow. Tonight, we're bringing you the top trends as we see it here on the Leaders of Tomorrow. We're speaking with experts across the course of this entire season and bringing you the key highlights and takeaways. Listen in.
India's unicorns are flourishing in the fast-paced and dynamic economy of today. These startups are not only developing innovative solutions and technologies, but are generating large-scale employment. Here is a list of trends impacting India's unicorn landscape. Listen in.
India has always been accepting innovations by large companies which are done for global. Right, so there is no specific innovation of products which is done for Indian consumption style. For example, I'll tell you, India has never consumed frozen food. All kind of frozen food has never scaled the way it has scaled in West. So we like fresh. If, for example, we have never accepted in large format, long shelf life milk. Okay, we always wanted, somebody to come home, deliver milk every day.
Milk the cow in front of you.
Right.
Yes,
So
yeah.
if Amul has cracked that, which can get delivered to you every day, that is what is a real innovation for Indian consumption pattern. I think just our hypocrisy, cultural hypocrisy of looking at few sectors like that. So let's look at sanitary pads.
Yeah.
Let's look at condoms. Let's look at alcohol. I think all these sectors have always paid the price of our view, as the country we are.
Our talent is everything to us. That is the entire company. So we've always kept a very strong culture-driven approach to working, because it's not just about paying well. That any unicorn can do that today. There's enough money that's flown into the ecosystem. It's about creating the right culture. It's about giving ESOPs to everyone. Solve a problem. Don't get into fantasy sports or gaming because it's a cool thing to do, because some of the biggest leaders in India have come back saying that this is the future. Come in because you are uniquely positioned to solve a problem that you're passionate about to a large market. Tomorrow with 5G coming into India, gaming is going to be one of the biggest beneficiaries along with OTT, etc. It's for the first time the government is really putting in its efforts to regulate and structure the gaming ecosystem and industry to help it grow further. It's already a $20 billion industry, and we believe that it can be a $100 billion industry in India and be a significant contributor in this $1 trillion economy that we want under our Honorable PM's vision to achieve.
Two or three things, right? In an early phase, when you're actually trying to raise capital, three things are important. Your conviction on the business is super critical. It is your conviction has to be reflected in the story that you tell your investors. It is about storytelling in the end of it. Yeah. And that's what I recommend saying. Don't be flowery about your storytelling, but literally talk about the truth, talk about the vision that you're going after. Okay. Because entrepreneurs have a unique ability to imagine the future and ability to express that imagination and be able to paint that canvas of how it will look like is an extremely important part of the process of investment. Second thing is be truthful as an entrepreneur. Talk about your fears, the risks that you see, the execution possibilities, and also the passion that you bring along. Because if I'm investors would love to understand the person behind it. And in early phase, a lot of bets are mostly on the people, the teams that are going to really address it, and not about the markets can change, products can change, but really the people are a super critical part of the whole equation.
I think it's very easy to start a brand. It's very hard to scale a brand.
Okay, so
right?
Scaling is a big challenge.
Scaling is a big challenge. So the reason most people partner up with us is it's very easy to get to the first 20 crores of revenue. But from 20 to 200 or 20 to 2,000 is a very different set of skills. You need a different thinking on technology, you need different thinking on operations, you need different thinking on people and talent. So I think that's what we bring to the table. So when we look at a brand, we look for three things. We look for customer love, which is, do they make great product? And do consumers love the product? Because eventually they're selling a product. Second,
and you are only D2C.
I would say we're digital first.
Okay.
I think we do about 10-15% of our business offline today.
Okay.
And I think that needs to be a critical part of building brands.
Sure.
So I think first is customer love. Second is founder quality, because in our model, founders partner up with us. I think I call these, we have 20 plus partnerships. I don't call them acquisitions because mentally we think of them as partnerships, right? So we look for great founders who can work with us. And third, we look for complementarity, right? Which is, what are they good at? What are we good at? And can we actually bring those two together? And 1 + 1 is equal to 11. So those are the three things we look for.
There's no guarantee that once a unicorn, forever a unicorn, right? Businesses can go up or down, which means you have to keep staying focused on building value, delivering new products, attracting new customers, and so on. So if anything, we find that the tag can be somewhat distracting. It can be, you can certainly start feeling complacent. You feel like, okay, the hard work is done, when it's quite the opposite. Now it does help in terms of increasing visibility. Customers now feel that you're a credible company, you're here to stay, so they can make long-term plans with you. So I'm not discounting that. Of course, it's helpful, but I think just psychologically, you can't, overthink it. You can't put too much, feel too good about it. You have to continue doing your job. Yeah.
COVID-19 has had a significant influence on the EV sector, posing unique complications in India's shared automotive and mobility sector. Even though economic volatility and fluctuating customer tastes have made meeting this goal more challenging, it is nevertheless worthwhile to analyze the electric vehicle business now. Let's take a look at the top trends impacting India's EV sector. Listen in.
What is giving wheels to this movement is fuel prices. Essentially, there is two aspects always to electric vehicles. One is the sustainability aspect, which is extremely important. But ultimately, what sells is, does it make commercial sense or not? Customers in India are very, very smart, and ultimately, when any product makes commercial sense, it starts to happen. What's now happened is that inflection point actually has come much sooner than many of us anticipated. If you look at any industry figures, the idea was, of course, there is a very clear statement right from the Prime Minister downwards that we need to move towards electric mobility. But the inflection point which has now happened in the last 1.5 years is really the fuel prices. And ultimately, what sells for vehicles is the total cost of ownership. TCO, the only thing that matters. And for TCO, specifically for commercial vehicles, the TCO has now become positive for electric vehicles, which is why the adaptation will happen. On passenger cars, if you see the world over, the adaptation was very low initially. There were the people who were concerned about initial brands. Brands like Tesla came in, they came up with very innovative products. But the real adaptation starts to again happen when you start to see the cost of ownership becomes in line with the conventional vehicles. So which is why, as I said, I'm kind of going out on a limb and saying it very clearly, but I stand by this statement that in India, we are going to have the largest EV market outside of China. And that's very simple because we have the largest two-wheeler market in the world. We have one of the largest bus markets in the world. And now the shift towards public transport is happening. Last mile delivery, we are a 500,000 market, which is growing to about 700,000. Three-wheelers is a major market. So if you take any of these, given the fact that the adaptation of electric vehicles is going to happen and people who travel more, the more you travel, the better an electric vehicle is. And in India, the vehicles are typically used more than they are in the West. So this is probably the reason I see adaptation happening very fast in India.
There are three large barriers to adoption. Okay, number one is awareness. Second is accessibility. And the third thing is affordability. These are, if you look at all the problems, you can club it under one of the three broad buckets, right? Awareness was a challenge some time back. And I believe today, even with people knowing about electric vehicles, there is general awareness, but understanding which EV is right for you, right? That sense of knowledge, that sense of expertise has still not penetrated into the larger audience, right? We believe that the Indian adoption, the revolution, EV revolution that we talk about, would be led by two-wheelers.
One thing that can become a deterrent for adoption is the huge cost, upfront cost of owning an electric vehicle or buying an electric vehicle. When FAME came in, the good part, which is done by FAME is one, it's asking OEMs to manufacture things in India, right? So it's in a way baked in with Make in India thought, right? That's good, right? So that we have the supply chain with us. The second thing that FAME is helping is bringing the cost of a 1 lakh rupee scooter down to 65,000, which for us, it's a boon because, when we want to deploy the capital, right? If it's coming at a 40% off, it's a beautiful, scheme. And that has actually given an impetus to any business and any entrepreneur who's thinking to go electric or switching from a petrol to electric to do it at a faster pace, right? So that's the good part on FAME. In terms of what is support that, possibly we will look for, definitely one of those would be a little bit standardization on batteries, right? Which I think is coming up, right? One more good thing that the government did was to reduce the GST, on electric vehicle adoption from 18% to 5%, which is a very good welcome step.
Across the world, it's very critical in a nascent space like EV when you're trying to build this up you need government support. Without government support, you cannot kickstart this. You need scale. And before getting the scale, a lot of work needs to be done. And these subsidies help a lot. So the government started with FAME in 2015 and then came up with FAME 2, 10,000 crores, right? Out of it, 8,500 crores was towards the EV, then 1,000 crores for charging. So this is what has kickstarted. If you see the trend, because of this FAME 2 last subsidy, the trend has just grown up. Like 300,000 EV vehicles on road today is just phenomenal. And I think with the last announcement that came with the finance minister, things are just heating up.
Out of time on this very special episode, but if you have any feedback for us and you want to hear any more such highlights and trends, do let us know. Our details are on your screens as we speak. Thanks for watching. Have a good night.